Welcome to Mad Money. Welcome to Cramer. Other people and friends, I'm just trying to make a little bit of money. My job is not just to entertain, but to educate you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Whew. We made it through October without a crisis or a nasty decline. And I, for one, am shocked. Today, like so many other days this month, after a higher opening, it looked like we were going to get clocked. But then the market found its footing, strangely, with the Dow finishing up 41 points as it began gaining 0.26%, the Nasdaq jumping 0.61%. Oh, it was a strange one, though. We had not one, but two terrific upside surprises from last night, Apple and Amazon, but only one resonated. Amazon stock shot up nearly 10% to an all-time high. But Apple opened strong and then gave up all its gains. The gigantic tech nation states that reported this week, which, by the way, include Meta, Microsoft, and Alphabet, overall acquitted themselves quite poorly. Only Alphabet really did well, with the worst being Meta, down more than 100 points in 2 days. Even though Meta's doing terrifically, Wall Street doesn't like that Mark Zuckerberg wants to spend a fortune to fend off his AI competitors. More on that later. It's interesting. Amazon actually was quite frugal, and people like that. For now, you just need to know that even though I'm a big believer in AI as the fourth industrial revolution, Wall Street's gotten skeptical of all of this capital spending. I still think these stocks are worth owning, and great stocks are the best defense in any tough market, as long as you own them as part of a diversified portfolio. Like I say in How to Make Money in Any Market, you should own one or two of these and trust them. Own them long term, though. Do not try to go in and out and in and out. It's all your call. But we encourage long-term investing in Cramerica, and that's how you make a real fortune in stocks. Now, look, I understand it is a tempestuous time. Lots of companies that serve the consumer have gotten very, very weak, in part because of inflation, in part because of the now endless government shutdown, and in part because of people getting worried about AI taking away their jobs. Still, I think you got to have the long-term view here. We're in the middle of earnings season, just finished the biggest week, and we come out relatively unscathed. More important, we made it out of October without some sort of collapse. Historically, we dodged a real bullet. So let's see what the first week of November has in store for us. Now, we don't have to wait until Monday for some important news. We get Berkshire Hathaway's earnings tomorrow morning. And apparently there will no longer be any commentary from the greatest investor of all time, Warren Buffett, who's retiring as CEO. The 95-year-old Buffett has agreed to turn the company over to a fabulous exec, Greg Abel, who will take the reins at the stock at year-end. The stock's been getting clobbered here, though. I presume that's because of the changeover. Now, look, you got to understand, I think Berkshire's a terrific company, and you have to expect more profit-taking as Buffett leaves. But what can I say? He is irreplaceable, but the company's a great one. Monday at the close, we hear from a company that may be, and this is a little hyperbole, the next Berkshire Hathaway. All right, I'm talking about Palantir, run by the brilliant Alex Karp. I know, presumptuous and heretical of me, but I am just reporting on the narrative as I keep hearing it from so many people. Palantir is obviously nothing like Berkshire, but people worship Karp. They do. And they like to think he is the Buffett of what he does, and he does run an amazing consulting and advisory company. When Palantir stock was at 50, I said it would go to 100. When it got to 100, I said it would go to 150. And when it got to 200 this week, I said it's headed to 250. After this run, I do expect some profit taking in the quarter, but I'm not backing away from this one long term. Why? It is just too good to ignore. And it's clients whom I've checked in with, multitudinous. They love them. Now, we also hear from Clorox, quite different from Palantir, with a stock that is down more than 30% for the year. Clorox is at the heart of this market's conundrum. In the old days when we had worries about the economy, everybody bought the consumer packaged goods stocks. Now, perhaps because of inflation, people just won't pay up for the name brands. Let's see what CEO Linda Rendell has to say. Now, will Pfizer break out from the $25 level? Oh, it's been a dull run for this former growth drug stock, as shareholders seem to be satisfied with a 7% yield, not much price appreciation. I like growth, but that dividend seems safe and is backed up by cash flow. On Tuesday morning, we'll find out if Pfizer is going to be more of a stock and less of a bond equivalent. Shopify turns in its numbers Tuesday. This is a good one. Canadian, terrific. It's become a very reliable winner. I think it can duplicate. It's an e-commerce champion that has a great way to work with small, medium-sized businesses. Hey, by the way, I feel the same way about Uber doing well. Another company that's fulfilling its grand ambitions. After the close, we have two huge winners so far this year. Well, one for many, many years. Well, actually, both of them, really, AMD and Axon. Now, we've had their CEOs on repeatedly. These are the kinds of long-term outperformers that you simply have to consider owning. Lisa Su at AMD is challenging NVIDIA at its own game. Axon's upending the entire law enforcement paradigm with its tasers, its body cameras, its drones, and its automatic artificial intelligence drive police reports. You know what? I actually own them both. Not for the screamers, though. Caterpillar's become one of the best performers in the entire market, and I think that move is justified, given how so much of their equipment is used to make and maintain data centers. The company holds an analyst meeting Tuesday. I want to know if this move is multi-year in nature. I have to tell you, spoiler alert, I think it is. Oh, and please don't forget to vote. It's your civic duty. Now, on to something more interesting. McDonald's reports on Wednesday, and I think they are the single best judge, maybe in the world, of the true state of the consumer who is strapped, who is worried. Alongside, by the way, restaurant brands, Burger King, which is on the show tonight. We keep hearing about this cash-strapped consumer not willing to eat out and wants to stay at home, wants to preserve capital. But only McDonald's and Burger King can really tell us if that's true or if just people have decided that tastes have changed. Robinhood reports after the close, and this online brokerage has managed to win over millions of investors, maybe you. It's become the bell cow of this rally. And I am betting we get some fantastic numbers. Now, it's tough to get data without a government, with this government shutdown, right? But you know who has the best? I think Bank of America does. And it holds an analyst meeting on Wednesday. We're going to find out more about the consumer from them than anybody else. I think it'll tell a relatively sanguine story about the state of the economy and the bank, and it could be uplifting. It's a very inexpensive stock. Next, what the heck is really going on with this Warner Brothers discovery? Is the company going to sell itself to the highest bidder? Are the earnings any good? That's Thursday's business before the open, and I want to see if there's going to be an auction. To me, the stock's moved into arbitrage levels, meaning it's up a ton in anticipation of a takeover, but I think you could still catch a couple more bucks if they close any sort of deal. Of course, if they don't, though, like arbitrage, look out below. We got a couple real good ones lumped in here today. We got a Firm for buy now, pay later, SanDisk for tech storage, and MP Materials for rare earth materials. All three have had tremendous stories to tell for a while now, although SanDisk has had a huge and now parabolic run, and I don't like to recommend the ones that are in parabola mode. Finally, Friday, we got a lagging fast food chain, Wendy's, and one of the best performers of the year, Constellation Energy. The company generates power, including a lot of clean nuclear energy. I think these two bookends are most appropriate. Winners win, so you continue to buy Constellation, and unfortunately, losers keep losing, so you got to avoid Wendy's, but especially, by the way, when we have the superior restaurant brands coming up later in the show. The bottom line, I can't tell you not to be glum. I can tell you that the year of magical investing is not yet over. It's taking a breather. But we did get through the historically tough months of September and October with no break in the magic. If the past is any guide, November and December tend to be much, much better. Let's go to Jerry in Illinois. Jerry.
Hey, Jim. Your mission has been very successful in our family. About 10 years ago, maybe more, maybe less, you told us to keep an eye on and to turn our attention to our children and grandchildren. So here's what we did. We opened up 4 custodial accounts, gave each kid $100, and we said whatever they earned in the summer or their after-school work, we would match dollar for dollar, only in stocks. 2 for 1, by the way. Well, it's 7 years later, and you're really not going to believe how much money. Well, I don't want to tell you because you won't believe me. But there's something else that happened. We made 4 lifetime investors. They call us and ask questions, and when they do, I make them do some research. So one of the kids came up with something about a year ago called MNTN, which is really my question. I couldn't figure it out. I didn't know what it was, but they loved it so much. I bought each of them 25 shares, then bought 25 shares for myself. So I follow it, and I can't figure out what's going on. Can you help me?
I can't either. I think it's a better company than it's trading. I know we spoke to them earlier today. I do believe that MNTN offers a great opportunity for advertisers. Let's just step back for a second, though, and think about what you've accomplished. You have made it so that people's lives have changed. I'd like to think I played a role in that. You're kind enough to share with me. MNTN so far has not worked out. I was telling Ben Stoder earlier today, I am surprised myself that it's not doing better. they're not delivering. And that's just unacceptable. Okay. The year of magical investing is not over. It just took a breather after a couple of historically tough months. And if the past is any guide, November and December, they do tend to be much better. Well, Mad Money tonight. Every day I feel like we've got another story about how the consumer's pulling back from spending on restaurants. So where does the company like Restaurant Brands International fit in the equation? I'm checking in with the company's top brands. Then we're celebrating Halloween Mad Money style by taking a bite of Hershey's to see if there's any hope of a sweet future for that one. Oh, by the way, someone tell me what's going on with Columbia Sportswear, please, after hitting a 52-week low. What should investors make of the apparel company's future? I'm going straight to the source for answers, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.